Good afternoon from Germany, this is Pascal speaking. It is a new month, Wednesday, March 1st, and we can live stream because my brother is late for his visit, so I'm able to live stream for market open. Hope you made some decent profit yesterday. Let's hop right into for the economic news today with manufacturing PMI. This is Nasdaq right now. Let's see it on an hourly time frame. So yesterday we had a retest of the pre-market highs. We were talking about this 12,150 point level. We went a little bit higher at highs of 12,174 points, and then there was the sell-off for market close, and we retested day's lows. During the Asian session tonight, we tested the 12,000 level again, had a smaller sell-off below, lows of 11,989 points. Then back to the highest 12,142 points, and now we are retesting the lows of yesterday, as you can see. So market is about to open in 2 minutes, and then we will see which direction we will take. But it was like expected yesterday, just more sideways trading here. We are caught in between these ranges of about 12,000 points and on the higher level 12,200 points. So a 200 points range for Nasdaq in the previous 4 trading days. Let's see if we can see the breakout today to the upside or to the downside. I still have the same small position in Nasdaq long, so no big movement here. I waited for higher levels to come for the breakout here on the upper side. Didn't happen, so I'm still waiting, being patient. And if we don't see higher price levels, then I will just close out if we go again below the lows of tonight here. So let's see the economic news. Manufacturing PMI is in about 15 minutes. So this is Purchasing Managers Index, a Manufacturing Purchasing Managers Index. The forecast is 47.8, previous number was 46.9, so it's a little bit higher than the previous number, the forecast, but yeah, it can also be lower than expected. This would be a good sign for the market. Too high a number wouldn't be too good because of the fear of higher interest rates. So let's see CME FedWatch tool, if it shifted more, 21 days until the next meeting. Here we see still 26% for the 50 basis points move and about 74% for the 25 basis points move. So no change from yesterday. Yes, 24%, but in the evening I have already seen 26% here. And the probabilities for the next meetings, about 5.5% should be the peak level of the interest rates. So market is open now. Let's see where we start. And we retested 20 EMA here and pull back now, but the parabolic is already changing to the downside, indicating an early uptrend. Let's see if the lows can hold here. Rishi is asking, Pascal, isn't the trend showing lower lows on the 4-hour and the day? Yes, it is. I was saying in the previous live streams that I'm trading against the trend. So here we can see the sideways trading phase again. So the lows are about the same. We had only 1 day here with this false breakout to the downside. So it's still sideways trading here. But of course on a day chart we clearly see that it's making lower highs and lower lows here. So we are just waiting for the breakout if we can see a reversal to the upside or if we will finally break with lower lows. Next target to the downside would be 11,850 points. We didn't reach this point last week on February 24th. The low was 11,922. So we had 20 points left, 70 points left to this Fibonacci retracement here. This was also previous low, as you can see here, with 11,871 points. So about this area, I'm expecting the next support, 11,850 and 11,870. This 20 points range, there should be the next support. Let's see what the news can do for the prices, if the news can act as a catalyst. We will have another three-star event here in 27 minutes, also manufacturing PMI, but ISM manufacturing PMI. This one will be more important, but yeah, we will see the outcome in about half an hour, and then it can act as a catalyst to the up or downside. Carlos is asking, there was a pretty big sell-off the last couple of hours before market open. Do you know if this had anything to do with Germany's CPI numbers? Yeah, let's see Germany's CPI numbers here. So German CPI year over year was 8.7%, higher than the expected 8.5%. Of course, that's not good for the German market. Therefore, there was a smaller sell-off, but nothing really big. So I can show you the German index. This is a weekly time frame, so still in a sideways trading here. And on a daily time frame, you can see that DAX is still green. So no big effect on DAX. Of course, we were pulling back a little bit from the day highs here at around noon, but it is still positive because we opened with an up gap here. So no big effect, even if the CPI number was higher than the forecast. So you see that it can be handled completely different to the US, and we don't have to have a big sell-off on higher than expected CPI numbers here in Germany. Yeah, it's not a big fun to have still this high inflation rate here. So probably European Central Bank will have to higher the interest rates on the next meeting because we still have some countries here with double-digit inflation rates, and therefore we need higher interest rate levels. So I'm expecting 50 basis points move from European Central Bank on the next meeting, but yeah, we still have some time for the next meeting, and therefore we will have more economic news from there. But I don't think that the US market is affected from this German CPI number. I don't think so. It's just the overall fear in the air that we will see higher interest rate levels, and now we will see pullback below these previous lows here, maybe a retest of the 12,000 area. Let's see if we will reach it before the numbers are out. We have these pre-market lows here during the Asian session, 11,989. We can also see a retest of this level. Let's just draw another line here. So this should be our supporting area here. If we go in, you see this was a right after the closing yesterday, we had these low points here at 12,025. So this level is still in place. It acted as a support again. We went back to 9 EMA, and now we are trying to push below this level here. 12,025 points was also an important resistance previous week. You can see here on last Thursday, we had this low point at 12,028 points. Therefore, I draw the line here. And we are retesting this level now. We had the low points yesterday here. So it is an important area. Yeah, let's just wait for the news and see what will happen there. Yes, Carlos, this 12K level has been such a strong support level. Let's see how long it can hold. Yeah, every support level will be broken sometime, so it won't last forever, but it is still strong, and therefore it is important to have a look at the future prices, because there we will see the important psychological levels, because most of the traders are trading futures and not trading the Qs or whatever ETF you are looking at. The important psychological levels are seen on the future prices. Okay, let's move on until the news are out with our VIX. VIX was pulling down to 20.8 today. It's a little bit higher now, but yeah, a little bit higher than the closing yesterday, but we went to lows today of 20.22. So still a pullback here overall in the previous trading days. No big fear here in the market. More interesting is natural gas. It's now trading sideways. We are still waiting for the breakout here to higher price levels. So we can probably see a push up to this $3 area here. Maybe $3 and $3.10 can be an important resistance here, because we had previous support here So I'm expecting a pushback in this area. As discussed yesterday, we had the pullback here to the 20 EMA level, but then the bulls went back in the market and pushed prices higher. So we closed green. As you can see, it's a bullish sign here. We are now trading above the moving averages. Parabolic is indicating an uptrend, and ADX is about to cross here. So it's a good sign, even if we are trading sideways today. I'm expecting the prices to go back here between $3 and $3.10 for May natural gas future. Move on with crude oil. Crude oil is still trading sideways here, pulled a little bit higher in the previous days, but I'm expecting the prices to retest the previous neckline here between $72.50 and $73. So this should be a stronger supporting area. Let's wait how the economic news come out, and if it's still strong, then probably crude oil prices can hold strong, because the Chinese economy had strong numbers, and therefore oil prices aren't dropping so fast like natural gas was dropping. So orange juice, let's see, orange juice is now deciding. It's just open for 90 minutes, so we will probably see which direction we will take today. You see that the market tried to retest previous highs here. The previous high point was here at 259.44 cents, and this high from yesterday was 256.95. So almost reached the highs, and you see these wicks on the upper side of these previous 2-day candles, and therefore I think the bulls will have some trouble to push the prices higher or to retest the highs, and we are about to see the high point, maybe a double top. I'm waiting for more signs of weakness, and then I want to take on more to my short position. I already entered here at the closing of this gap. I entered 3 contracts short in orange juice, maybe a little bit too early, but I'm waiting for more signs of weakness, and then I will add to my position here, because I think we will have about 20% room to the downside to retest the $2 area here, this previous breakout of this reaction here to the upper side. So you can see that the orange juice prices are pretty high here. I will just bring up Finviz so that we can see the orange juice prices on a longer time frame. I can pull up the monthly charts here, and you see we are at high prices. We haven't seen such high orange juice prices since 2005. So it's pretty high, and you can see that the commercials are willing to sell here their positions. So they're pretty short right now. And this is a good sign that we will soon see a pullback of the prices, and that's what I'm speculating on. Not with options, but with futures directional. I know that orange juice is not one of the most liquid traded futures, but it's still acceptable, and I want to be short here in a position. Seasonal charts will turn negative mid of March, so within the next 10 days we should probably see a pullback here in orange juice. Then let's see TLT. So bonds pulling back the 4th consecutive week here. Let's see this on a day chart. We are in a sideways trading phase right now, trying to push below the $100 area. We had the dividend payment here of about 25 cents, but probably we will see soon a push below the $100 level of TLT ETF if the fear still stays there in the market, and if we will have higher expected interest rate levels, then probably TLT ETF should pull back together with the US bonds. Let's see ES future. So ES is a little bit weaker than Nasdaq. We retested last week the 61.8% Fibonacci level at 3,948 points. So maybe we will see a retest again. It's still weak, as you can see, higher lows, lower highs, lower lows, so below the moving averages. But we can see a retest here of the 4,000 or maybe 4,030 points here of the 20-day EMA. It's still risky to trade against the trend, but S&P is a lot weaker than Nasdaq right now. Let's move on with the Forex. US dollar, Japanese yen on a weekly time frame is still bullish here. I'm expecting a pullback here in this previous resistance area. Then we could see a shoulder, head, shoulder formation. So I'm waiting for this, even if we are pulling back a little bit this week. So the previous 3 days we had huge wicks on the up and down side, but you can clearly see it is still an uptrend here. So just waiting for these levels to come and then maybe enter an early short. Euro USD, where's my other Forex chart here? So on Euro USD we see a big green candle today. Why? Yeah, of course, because of the CPI numbers from Germany. Higher CPI means higher probability of higher interest rate levels, and therefore more pushing into the euro out of the US dollar, because there will be less difference between the US dollar and the Eurozone in terms of interest rate level, and therefore a push here to the upside of about 0.9% today. Normally this is a good sign for the stock market, but of course because of the publishing of the CPI numbers, this can be just a false indicator today. So be cautious, the market can still drop, but normally it would indicate more strength for the stock market. But we now reached here the resistance zone. As you can see, this was a previous support level. It should now act as a resistance, so I don't think that we will push stronger here and close above. But let's see, we can have always a surprise every day and everything can happen. In about 2 minutes the news will be out, so let's go back to Nasdaq and see. So they tried to fight this level, 12,025 points, just triggered some stop losses below here, but hold the 12,000 area. So the first PMI news will be important to see if we can hold the line here and stay above 12,025 points, or if the bulls will lose this fight and the bears will take over to retest pre-market lows here at the 12,000 area and below. So let's see it on a 1 minute time frame and see the news here. Back to this one. So here we can see both. First manufacturing PMI in just a couple of seconds, 15 seconds left. In line would be perfect, so no higher inflation risk, but also no cool down of economy. A little bit lower than the forecast, not too bad. So less risk of higher inflation, but not too low, below forecast, still above the previous number. This is perfect for higher prices. So probably we can hold the 12,025 level. But yeah, it can still be different in 15 minutes when we have ISM manufacturing PMI, because this one can still be higher than the forecast. But for now, it's a good sign the bulls are taking over here. It's really not interesting to swing trade it here because, yeah, as I mentioned, we are in a sideways trading phase and I would clearly wait for a breakout to take on new trades. I don't want to take on more longs because I already have a position here, and yeah, it's a small one for my portfolio size, but it's enough for me. I don't want to trade on with a higher position size against the main trend here. Just waiting for some early bears to be pushed out to maybe see a pushback in the 12,250 area here, or maybe even higher to the 12,400 area. This would be my main target here if we can push back to 12,400, and if not, I will close some early here at the 12,250 points. So we didn't manage to go there yesterday and Monday, but there's still some chance that we will see higher levels here before we can turn on in the main trend to the downside. So 12,050 points already, and still 15 minutes left. We have to go above the previous highs here to indicate a change of direction on a 5-minute time frame here. Retest of the 20 EMA now. Parabolic is still negative, as you can see, because we closed with this candle below this dot. but it's sometimes different on higher time frames because there we have more room. The parabolic is a lot higher, as you can see near VWAP and 20 EMA. So there's more room to the upside to turn this into a bullish trend again. The same on an hourly time frame. Here we almost retested the parabolic at 12,000 points, but it is already indicating an uptrend. You can clearly see we went higher during the European session, the Asian and European session. So we crossed the parabolic here, indicated an uptrend, but as soon as we crossed, it was turning down. So yeah, sometimes it's interesting to wait for the prices to come before you enter the trade. So yeah, you see here the change of direction to an uptrend, and as soon as we hit it, it just acts as a resistance and the prices were pulling back. The same today, so we just hit the parabolic and then it went to the downside. So sometimes it's just interesting to take it as a too early indicator on an hourly time frame, especially here in the sideways trading phase. So we need a clear breakout to see more dynamic to one of the two sides. A little bit more bullish now. Retesting 20 EMA now. Should act as a smaller resistance, but the main one will be here. Previous highs, and as soon as we see higher highs than the previous ones, then VWAP should be a resistance, 12,075 points. And when we break this one, then 12,106 points, 107 points, this pre-market low, as you can see here, and the Fibonacci level should act as the next resistance. But it's looking strong. Pretty bullish now. What will it take to shift the market? It's a good question, Rocket. So sometimes you cannot predict what is shifting the market. Sometimes it's just a small news. You didn't ever thought that this news will shift the market. So I'm not speculating on what will shift the market. I will just wait for the breakout. So every news can bring this shift to the up or down side. But sometimes it's just without any news. We just trade to one of these directions and we'll see the breakout. So you have to be prepared for this. And you cannot say this news will bring the turnaround, because it can be everything. There are no major news this week left. So we are Wednesday here. Thursday is only initial jobless claims, just a weekly number, nothing really important. And Friday, ISM non-manufacturing PMI. And this one can be important, but I don't think that it will shift the market. So yeah, let's see next week. Maybe we have more important dates here. Joel's job opening, this one will be important, of course. This is a monthly number. And ADP non-farm employment change will be important. Why? Because we will see for Friday for non-farm payrolls. Normally it's the first Friday of a month, but this time it's the second Friday, so it's next week. And we will see non-farm payrolls, and this can be the shift for a breakout to the up or down side. So a lot of job market data next week on Wednesday and Friday. So these 2 days will be important trading days with a lot of volatility probably. So let's be patient and wait if you are in a position. Therefore, I said yesterday, it's sometimes better to be not in any position in this sideways trading phases, especially when you are swing trading, because it can be pretty boring just to see that we were higher than lower, higher and lower again. It's nice to have this for day traders because they have clear levels where to take on profits for longs or for shorts, because these high and low points are acting as a clear resistance and support levels. But for swing traders, it can be pretty boring to stay for a longer time in this sideways trading. We had the breakout here above the previous highs, and now you clearly see VWAP is acting as a resistance. Pull back here to the 20 EMA. But on the next attempt, when we probably see the news, and they are also bullish, then we can see the breakout above these VWAP level. So let's go back to this week. For today, It's German. I will bring it up in English for you. ISM manufacturing PMI in about 7 minutes. 48 is the forecast. And the previous number was 47.4. So ideal would be the same like here, 48 or a little bit lower, but above 47.4. This would be perfect for the bulls for higher levels here. Smaller sell-off. Let's see this on a 1 minute time frame. So you clearly see now higher lows, higher highs. It's still uptrending, but it can pull back to the 20 EMA here. This was a previous high point here, should act as a support. And then probably on the news in 7 minutes we will see the breakout here. Break of VWAP. But I want to talk about zero DTE options. So I promised to talk about this. So let's bring up my option trader here and talk about the effect of zero DTE and what gamma squeeze is. I think I already talked about this effect, but it is pretty important because I see a lot of zero DTE traders now, especially retail traders with only basic knowledge or no knowledge at all of zero DTE. And therefore 11 watching and only 6 thumbs up. Yes, Rocket, unfortunately. So please, everyone who likes my streams, please give me a thumbs up. And if you haven't done so far, subscribe to my channel. And now be cautious, because this information will be important for you for the whole market, because we have a lot of trading volume in zero DTE options. Zero DTE means that these options are expiring on the same day. For SPX index, so S&P 500 index, we have cash settlement, so there's no deliverable, difficult word, no deliverable future or stock, but it is settled cash at the end of the trading day. So every day we will have zero DTE. So today it's March 1st, so this one is our zero DTE options here. Tomorrow we will have again one, and the day after again, but we also have weekly options. So on some days we will have 2 expiries of SPX options. You can clearly see here the March 16th we will have 2 expiring options, SPX W and normal SPX. So you have to be cautious. I already had this with some clients having no knowledge at all about zero DTE, and they traded this one, SPX, instead of SPXW. And the main difference here is that it is expiring the next day. So it's not a zero DTE at all, just the trading ends at the end of the trading day. So at 4 p.m. Eastern time, the trading ends for SPX options, but the settlement of the option is on the opening auction on the next trading day. So you have to be really cautious, because a lot of things can happen overnight. So if you want to trade zero DTE, always trade SPXW and never SPX, because these here are settled on the next trading day on the opening auction, and you won't be able to trade them overnight. So this is a big risk, and therefore there can be a big difference in the option premium. So if you're only looking at on the premium and you are saying, oh, I get a lot more premium for these March 16th SPX options, yes, because these are settling the next day, and you will have to stay longer in this trade if you're not closing it before 4 p.m. on March 16, because the settlement is March 17 on the opening auction. So this is the first big difference for zero DTE. But the main thing I wanted to explain here is gamma squeeze. What is gamma squeeze? So here you see the delta. Delta means how many stocks you have to buy if it's, for example, a stock option like Tesla or whatever. How many stocks are comparable to this call options? Here on the left side we see calls, on the right side we see the puts. Here we see the prices of the strikes. So basis price in German is the strike price. So here the current price level is 3,970, and here we have the delta 50. You see delta 51. So this is at the money, and for at the money we currently have the price of $12. So $12 is what the market expects the SPX to move today. So $12 to the upside. So this means an expectation of 3,982 points. So if someone, for example, a retail trader is buying this call for about $12, then probably a market maker is on the other side and holds the short position. So there's always a long and a short position, because if someone is buying, someone else has to sell. And in about 90 or 95% of the time, it's a market maker on the other side. And what is the market maker doing? He's not betting against the retail trader. He doesn't think that the market will drop because the retail trader is thinking the market will go up. So what does he do? He is hedging. So he's hedging with futures. If you want to hedge SPX, you can hedge with ES futures, for example. And therefore he has to hedge the delta risk, because the option premium here is moving faster if you have a bigger delta. For example, you can see here the lower strikes of the calls have higher deltas because they are in the money. So they move faster with every point the SPX is moving up. So 90 cents per point the SPX is moving up is the delta. And at the money, it's just 50 cents. And out of the money here, you see lower deltas, because there's a lower probability that these options will be in the money at the end of the trading day. And if someone is buying at the money, so the market maker has to buy about 50 stocks from the underlying asset, or in this case here, half position size of a future to hedge this risk. And the more the SPX index is rising, the more the market maker has to buy stocks or futures to hedge the risk. Why? Because delta is not the same. It's rising the more the SPX is rising, and it's falling the more SPX is falling, as you can see here. So at the end of the day, we will only see delta 1 or delta 0. So everything is in the money or out of the money. So either the option will expire worthless, or it will be in the money and there will be a value. So now we will have the news, so I will just shift back and then explain here more. Let's see what Nasdaq is doing on the next PMI news. Here in some seconds. 30 seconds left. So VWAP acted as a resistance. We are trying to push below the previous low here. Pretty interesting now to see how the news will affect the prices in about 15 seconds here. And then I will move on with the explanation of 0DTE gamma squeeze. 12,050. News are out. We went higher but are now selling off. Oh, 47.7, a little bit lower than expected but higher than the previous number. So like the first manufacturing PMI, normally a good sign here. ISM manufacturing prices are a lot higher, as you can see. 45.1 was the forecast and 51.3 is the actual number. So because this is a price index, it's not a good sign. So this means higher inflation risk here, a lot higher than expected. Not so good here. No, you got 7. No, I got 10. I can see 10 thumbs up. Thank you. Just one person left watching, not giving a thumbs up. But it's okay. It's okay. So, a big indifference candle here. A lot of wicks to the up and down side. Overall, ISM manufacturing PMI was bullish, but the manufacturing prices are not so bullish. Let's see what the market is doing with these numbers here. We now have bullish and bearish signs. So now we can see the fight between bulls and bears, but probably the bulls will win as soon as we will go above 12,075 points, above previous high points and above VWAP. So they will have the technical factors on their side. So here you can see we retested previous lows here, 12,025 again. This is an important level, as you can see. But maybe we will just see more sideways trading today because of these bullish and bearish numbers. Sometimes the decision isn't taken yet. Inflation is still not under control. Yes, Rocket, that's the case. And that's the fear of the market. And the market hates to have fear. So let's see if there's already a shift here. 30% now. It was 26% when we started the stream. It is 30.6% now for 50 basis points and probably shifting higher. So this should bring gold under pressure. Let's see it on a 5-minute time frame. Big candle of indecision. So it was moving higher today, but normally it should bring gold under pressure if we see higher interest rate expectations, and the same for Euro US dollar will be interesting. Maybe more pushback here. Yeah, pushback from this level where we were before, because higher interest rate expectation for the US dollar will make the US dollar stronger. And the same for TLT. More pushback for TLT, probably. Just sideways trading here. Yeah, it sometimes takes its time, but when there is a shift in interest rate expectations, then normally we also see a pullback in the bonds. Yeah, that's what's happening now. Not a good sign for the market. Yeah, but sometimes you have to wait for the end of the day or for the next trading day to see how the shift of the expectations ends here. So the next Federal Reserve meeting will be really interesting in 21 days. If they will take on more pace again with 50 basis points, or if they will stick to 25 basis points, this will be really interesting. Yeah, pulling back now of TLT. And gold also pulling lower. Stock market trying to retest the lows. Yeah, the risk of inflation is never a good thing. On a 1-minute time frame, still below the 9 EMA here. If this acts here as a neckline, this could be a first shoulder, second the head, and now we are waiting for the second shoulder here. So this should act as a support, 12,025. Second shoulder can be formed here at around 12,060 points. And then we will see if we will break below the neckline here. But if the market is weak, we will break below earlier. So PMI was good, but PMI prices was not good. And therefore market is dropping right now. But we can still hold the 12,000 level or just pull back below 12,000 to trigger some stop losses and then go back above. So let's move on with my explanation of 0 DTE. And then I will close out this live stream to meet my brother here. So if the market maker wants to hedge these 3,940 strike, which was a delta 50 and which is now delta 80. So you see the prices have changed. But when the market maker wants to hedge this one, there's always a difference in delta. So they have to buy or sell the underlying asset, which is SPX here. So probably they will hedge with SPX futures or ES futures. And this will, of course, have an effect on the market. So the more buying demand there is from the market makers' hedging activities, the more this will bring up the prices. And this will bring up the delta again. So the delta will rise. And therefore the market maker has to add to his position to hedge the delta again. And the more they buy, the more demand they have, the more this will bring up the prices. So this will be an upward spiral. So the more the retailers buy calls, the more the hedgers have to buy the underlying asset, SPX futures or ES futures. And this will cause an upward spiral. But when the market is shifting to the downside, like it is right now, and the prices are dropping, what happens? Delta is going down. It's coming down. What is happening? The market maker has to get rid of their hedging positions. So they will sell some of their futures, their SPX or ES futures, to have less risk because they want to be delta neutral. And therefore this will cause the downward spiral. So the more the market is dropping, the more they will sell their hedging positions and sell their futures. And this can cause big volatility like we have seen in the previous trading days. It's just a small range of 200 points in Nasdaq, but it can cause volatility with about no news, just because retailers are buying big chunks of 0 DTE options. Because there the deltas are changing pretty fast, as you can see here. Because at the end of the day, the delta has to be at 1 or at 0. or if you look at the puts, at 0 or at -1. So the delta is changing pretty fast. And this is gamma here. You can see here the gamma. And the gamma is higher the more we are at the money option. The gamma is explaining how fast delta is changing. So especially here for at the money options, the gamma is the highest. As you can see, in the money and out of the money, the gamma is lower. But at the money, we have the highest gamma price. Why? Because it indicates that the delta has to change to 0 or to 1 until the end of the day. So there will be the biggest difference in change for delta to 1 or 0. And therefore, this one is the biggest risk for the market maker to hedge. This is why we call it gamma squeeze, because this gamma will rise until the end of the day. And right before the closing, we will have the highest gamma at the money, because then every option has to be in the money or out of the money. The delta has to be 1 or 0. And the market maker have to hedge exponentially, because they will have to sell the hedges or they will have to buy more futures to hedge their call risk. And the same for the options on the put side. They will have to short the futures to hedge these long puts, or they will have to buy back these sold futures to de-hedge, to deleverage. So this is causing this high volatility over just a trading day, because the market makers are hedging their risk in these 0 DTE options. And it's a high volume which is traded in the previous days and weeks, especially when a Federal Reserve meeting is. When Jerome Powell is speaking, we have a high volume. More than 60% of the daily trading volume in options is in 0 DTE options. That's crazy, because of the high gamma risk. And the market makers have to hedge this risk. They are not speculating against the retail traders. They even don't know who the other side is. It can be a professional, it can be a retailer. They don't know. They don't care. They are just taking care of the risk, of their delta risk. So they are hedging. And their profit is the difference between bid and ask. So if they are buying or selling, they don't care. They are just caring about their portfolio risk. So if someone is buying a call and the other one is selling a call, so they can match these two parts together. And they don't have to hedge on the market. So that's easy for them. But if a lot of retailers just want to buy calls, so then the market maker is on the short side. He's the seller of these options and he has to hedge this risk. And that's what a bookie is doing. Like if you're betting on a sports event, the same thing. There are different odds for the event. So it depends on the probabilities. And the same here. If a high number of retailers want to speculate on higher or lower prices, they are taking probably long puts or long calls. And the market maker is on the other position, in the short side. And he has to hedge the risk. And that's what he is doing. And that is what is causing the volatility in the market. Because the derivatives market, the option market, and the future market have an effect on the spot market, on the stock exchanges, on all the stocks for the indexes. And yeah, that's what we see here when we talk about gamma risk, especially for these 0 DTE options. Okay, what your thoughts on Lucid as long? Don't expect it to jump up like Tesla, but they do seem promising for the future. Yeah, I said Lucid, we were talking about Lucid in the previous streams. They have some delivery issues here because they couldn't deliver as many cars as they wanted to. So yeah, they're still not profitable. It's a big difference to Tesla. You don't know if they will survive in this high competitive market. Let's see it on a day chart. We have a big open gap here, which waits to be filled up to the $10. But yeah, pretty weak right now, even on a weekly time frame for Lucid. We had this giant push here back to about $18, $17.80 was the high point. You see the rise of implied volatility here, and then the drop back to the breakout level at $8. So yeah, it's interesting to follow this stock. I wouldn't trade it. It's really risky, but we are making lower highs and lower lows right now. So I would wait for this $6 to come. Or a breakout above minimum $13 to see what will happen, which direction we will take on. But it's not a strong stock right now. But of course, with Investors Day from Tesla today, we can see a shift as well for Lucid. Let's see. Tesla is down right now, 3% below the $200. Again, normally in about 80 or 9% of the time, we have seen a pullback on Investors Day and after Investors Day, because there's a lot of excitement right before the Investors Day. Then the prices were pulling higher, but we are still in the sideways trading range. We talked about this in the previous streams here. First shoulder head, and this is the second shoulder. So normally we should see a pullback here to the 190 area, and then we will see the decision if we will pull below 187 previous lows here, and then there should be more selling pressure, or if it will act as a support, and then we should finally break above this head, above $218 to retest the $230 range. Back to your questions. 11,880, as we said. Yeah, maybe everything is possible. Just prepare for everything. We are now below the 12,000, 11,960. So I'm out of my long again. Just tweak this market. Let's see if we will retest the lows now. Previous low point here, 11,922. This could act as a support. And the next one, 11,850 to 11,870, should act as a final support. I will try one last time to trade a smaller bounce here to the long side. And if it's not happening, then finally I will look for some shorts, to enter some shorts. I know little about options, but I'm studying them now. R0DT is good for the market overall. Yeah, Carlos, it depends. So if you want to speculate and take on high risk, then perfect. 0DTs are made for you. But as a beginner, I wouldn't begin with 0DT options, because it needs some knowledge, at least some knowledge, to understand how they are working and what the risks are. So if you're a beginner in the options market, please don't start with 0DT options, because they move pretty fast. Right now they are ahead, but they're revamping a lot. Should be better than Rivian anyways. Yeah, Rivian had earnings, I think. So let's see Rivian. They had earnings yesterday, and they are down 15% today. So it's just crazy if you look back where Rivian started. I think it was around $80, something like this, when they had the IPO, initial public offering. So I will go back on a weekly chart here. So almost retesting the lows here. The previous low was $15.28. So if you want to trade the bounce here, you can try at $15.30, around this level for a smaller bounce. I wouldn't trade on a longer time frame, because probably we will see the break below as well. Yeah, even if it's a company from Amazon, this doesn't have to say anything. Even if they have a lot of money, as long as Rivian is not profitable, they will have issues, they will have problems. So the high point was here in November 2021 at $179. It's just crazy how far this stock pulled back. So if I draw a line here, this is 87% from the highs, and even from the IPO price. I don't know the exact IPO price. I think it was around $80. So let's say $80. Even from the IPO price, it pulled back 80%. So not a good investment at all for Rivian. So I wouldn't trade it a lot for the long side. It's a clear downtrend here. Yeah, it's difficult for the electronic automobile sector, because, or electric automobile sector, because a lot of car manufacturers are not profitable right now. So there was a big excitement at the beginning, but the only one really being profitable is Tesla right now. And of course, some other car producers which also produce combustion car engines. But the pure electric car maker being profitable is only Tesla, I think. And even the Chinese ones aren't profitable right now. But sometimes they are government backed, so the government is putting a lot of money inside and taking care that they will not go bankrupt. So they will get money from the government, and therefore, yeah, they have some big opportunities. Yeah, but it is an interesting sector overall to have on the watch list. Okay, back to Nasdaq for the final 3 minutes, and then I will close out this live stream and let you trade on your own. 11,950. Some wicks on the lower side. Maybe we'll finally see the bottom here and a change of direction again. There is some room to retest the 9 EMA. We're a little bit oversold, as you can see on RSI, but it's a strong downtrend now. Below the moving averages, below VWAP. Parabolic turn to the downside again. So Rishi is waiting for 11,714. Okay, it's lower than my target. So my target is 11,850. But of course we can also see lower levels. Let's zoom out a little bit to see the next target for Nasdaq. Oh, it's difficult on a 4-hour time frame. Yeah, we haven't been there for a long time, so I would see it on a day chart a little bit better. So the next Fibonacci level is down at 11,590 points. So we have a lot of room if we will not stay above 11,850. So there is more excitement to come for the bears if we will go below this area here. You can see we tested this level one day here, January 25th. We had this huge pullback here, but then it closed higher. So this one will be important. The day of low was 11,604 points. So right above this Fibonacci. So these levels will be important. But maybe it's just a false break again and we will end the day higher. Nobody knows. Just be prepared for everything. Never trade the news, just trade the news as catalyst and trade the direction. Come on, bears. So there's someone in a short position here. Okay, 1 more minute and then you will have to trade on your own. On a 1 minute time frame, the parabolic is changing to an early uptrend here. We are trying to go above 9 EMA. This is what we already saw on a 5 minute time frame, that this could be a bottom here. But we need 1 more minute to close this 5 minute candle. Could be the first green 5 minute candle for the last half an hour. First green candle with some wicks here on the downside. So it could be a retest of the 12,000 level here if we go higher. Let's see this on a 1 minute time frame. So trading right at the 9 EMA. You see the 20 EMA is sitting here at 11,983. This is the pre-market low during the Japanese session. And then the 12,000 level here was the other low here, 12,004 points. The low point right after the opening. So this should be the target now for the bulls if they can have some strength again. Okay, hope you had some fun. Hope you learned something today. I wish you a nice trading day, hopefully with some more profits that I had losses today. But the day is not over yet, so there's still some more time to make profits. Let's meet us again tomorrow for the next time I will live stream again. Be sure to be subscribed to my channel to be informed I go live next time. Have a nice trading day. Thank you for watching. See you next time.